Hey, this is Chris Creekmore, Creekmore Realty Group at the coast of North Carolina, brokered by EXP. And I am joined today with Steven.Banks. I've known Steven for several years, and he and I have done several transactions together. And we were talking last time Steven was at my office, we were talking about how does somebody qualify for a loan when they're retired and they don't have the income that they had. And there's a program, asset utilization, that he and I have used in the past, or the bank has used, and we thought this would be a helpful topic that people can just get a brief understanding of. Hey, there is a way to qualify for a loan when you're retired and you're now on a fixed income. So, Steven, if you would share with our audience a little bit about yourself and how long you've been in the business.
Yeah, thanks, Chris. Appreciate you having me on. It's always a pleasure to catch up, even when it's virtually like this. I've enjoyed getting to know your team over time, and yeah, last time we were in the office, we were chatting a little bit about this program. I think well, you asked how long I've been in the industry. So I've been in the industry for several years. Um, Before this industry, I ran a few tech companies to exit. So when we sold them, I jumped into this business. I've got a business degree, love finance, and I love helping people. So it's been a great fit. And to your point, that especially I feel like in our region, and for the viewers who aren't familiar where we are, we're in coastal Carolina. It's a very eclectic demographic mix. There are a lot of folks coming here to retire. And a big question is, now that I'm retired, I don't have my W-2 or 1099 or self-employment income. How do I qualify for a home? And we have a fairly niche program. It's called asset utilization. You might hear it called asset depletion by some people. It's the same thing. I'm not a fan of the depletion word just because it has a negative connotation. My assets are being depleted when that's not really the case. We're just using the assets instead of income to qualify folks for a mortgage. And full disclosure, it's not just for people that are retired. There are a lot of scenarios, financial scenarios, everyone's different, where someone might have heavy assets or be asset heavy, not a lot of income, and they can certainly qualify. Quick anecdotal story, I suppose, is last year I was working. I had a lady apply for a loan. She was recently widowed. Her husband passed away about a year ago. Left her quite a bit in life insurance, which she kept in her savings account. She was on Social Security. I don't remember what it was exactly, that 2,300 a month, something like that. Obviously, that's not going to qualify someone for a lot of home. But what we were able to do is look at the money that she was left in her depository accounts from life insurance, and she was qualified for an $800,000 home. And a question you might be asking, or the audience might be asking, is how does assets translate into income, and how does the math work? I'm going to keep it super simple, and I'm going to cover that here in a little bit. So with that being said, I will jump over to my slide deck.
So, question for you before you get rolling. This program, can it be utilized for a second home as well as a primary?
It will. You're 3 steps ahead of me, Chris, like you always are. It can. It's primary residence or second home, not investment properties for someone looking to get some extra income through an investment, through a rental. This is not the program, but for a second home, for a primary residence, it's absolutely a great program, and we can do 1 to 2 unit residencies. So whether it's um, primary single family home or even a duplex, that would work out great.
Great.
So what is asset utilization? It's not as complex as it sounds. In fact, I find these a lot more easy to deal with than a conventional, because the underwriting process is a lot easier to go through. So essentially, an asset utilization loan, it's a loan program where a borrower or an applicant is qualified for a home mortgage based on their assets and not their income. We can use income in addition to assets, but really the main qualifying factor is how much assets do they own, what qualifies as an asset. I'm going to hit on that here in just a little bit. And who should consider asset utilization mortgage? Really, it's for anyone whose monthly income isn't significant, but they do have a substantial amount of assets. Retirement is what we see most often, but it doesn't have to be retirement, as I mentioned earlier. So here's some examples. Income, someone that might be on Social Security, and just Social Security might not qualify for a lot of home. Disability, we see a lot of folks who are on disability, whether it's a veteran or elsewhere, and they get disability wages, and it might not be significant, but they do have other accounts. So retirement accounts, that counts as an asset. Traditional IRA, 401k, it could be a Roth or a traditional IRA. Those count as assets. Depository accounts, depository is just fancy financial lingo for your traditional banking account. So that could be a checking, that could be savings. Even a business owner, if they have assets from the sale of their business, we can include that in this type of a program.
If the business was sold, let's say the business was sold for $1 million, and so the new buyer of the business is paying in increments over a 5-year period. Is that what you're talking about, using the sale of that?
It is, and that's a great point. It can't be an active business in the borrower's name. It has to be sold. And we can only use the funds that have been deposited into their accounts. Most of the time in transactions, it's not a vesting kind of payout or a tiered payout, although that does happen. Usually it's a lump sum. If it is a tiered, we'll use what's been deposited so far from the sale of the business, or if it's a lump sum, we'll use the entirety. And I didn't put this in the slide, and I just remembered, for the retirement accounts, they can only be included if there are no prepayment penalties, which means 59 and a half is the age that the person needs to be able to withdraw funds or have it qualified to be an asset without prepayment penalty. If someone's 38 years old and they have $1.2 million, we can't use that because there is a prepayment penalty on that.
Got it.
So how does it work? How does the asset translate into income? Well, we still use debt to income ratio. That's we call that DTI, and that's total money coming in for the borrower versus total money going out. Well, if they have money just sitting in an asset, whether it's a depository account or a 401k, they're not getting that income, but we can use a formula to determine what that would be to qualify. So it's really adding all of the assets together and then just dividing by 240, and that will equal the monthly income that we can use to put towards the debt to income ratio. And I put an example here. So let's say I'm retired, which I don't plan on being retired anytime soon. But let's say I'm retired, I'm on Social Security, and I have between my IRA and 401k, maybe a little bit in savings, I have a total of 1.5 million. What we'd do is divide that by 240. That gives us $6,250, and that's what we put towards the income. That's how the math works. And then we add whatever other income they have, whether it's disability, whether it's Social Security, et cetera. And that's how we qualify for someone. So as you can see, it translates into quite a bit. And the good thing is underwriting process is much simpler. I think I mentioned that earlier. So for conventional loans, we need 36 months of transaction history to verify the borrower. With an asset utilization program, we just need the most recent month, just 1 month statements to verify this.
So they will transfer 600 or 6,250 into a checking account to verify it.
They can do that. They don't have to. They can set up distribution directly from their your IRA or 401k, whether that comes directly to them in a check, whether that is transferred into their depository account. There's different ways to do that.
Okay, so again, just for clarification, I need to take $6,250 from my asset and move it into a depository one time.
You don't even have to do that. It can just be sitting in the retirement account because we're not using that income.
Okay,
We're
good.
just using the assets. So the assets can just be sitting there, and we just need the most recent statement to show that you have that much, the total of $1.5 million in those accounts combined. So a distribution for asset utilization does not have to be set up to qualify. Great question. What's required? So some of the parameters, there's actually a lot of minutia involved in looking through this to be qualified. It's relatively easy. I don't want to bog the listeners down with the details. There's really just 3 or 4 main essentials to look at. As we mentioned earlier, and you asked this question, what type of residence? It's a primary residence or a second home between 1 and 2 units. We don't do cash out refis. I don't know any lenders that do for asset utilization. Cash out refinance is when borrower has equity in their home. Let's say their remaining mortgage is $300,000. The value of the home is $500,000. Cash out refi is you refinance the full value, the $500,000, and then you keep the difference of that $200,000 as cash. So we don't do that, but we do traditional refinance or just traditional purchases. Loan to value, that's another mortgage term. Really what that means is the percent of down payment. How much money do I need to put down on this? Maximum loan to value is 80%, which translates into at least 20% down. For someone that's asset heavy, that typically isn't a problem coming up with the down payment. And they must not be used as a source of income. So that was your question earlier. They must be sitting in the account. We don't need to set up a distribution from an IRA or 401k or anything like that. One other thing that I just thought of, the asset needs to be solely in the borrower's name. So let's say that they have a business account and there's 2 other business owners. The other business owners would have to be okay being on the loan for that to be qualified. Typically, this is not something that happens very often. We don't see random folks on asset accounts, but I just wanted to clarify that it needs to be solely in the borrower's name.
What if it is in bank's living trust or in a trust? Is that?
So trust accounts are a little different. Fannie last year changed a bunch of the guidelines of what can be included in assets. Fannie is a government department that regulates a lot of these mortgages. Fannie Mae, you might have heard of, or Freddie Mac. Trust cannot be included as an asset. However, you can transfer the trust into a depository or non-depository retirement account, and we can use that.
Okay.
And that's it. It was short and simple. I wanted to make this as digestible as possible for the mass. There's a lot of different financial scenarios, as I mentioned earlier. I wanted to hit on the big topics. So in a nutshell, asset utilization is where borrower depends primarily on their assets to qualify for a mortgage, not their income. It could be for anyone who doesn't receive a significant amount of income, whether that's someone that's retired and they just get Social Security, someone on disability, someone who is 59 years and a half years or older, and maybe is employed but doesn't get a significant amount of income from their employment, but does have money in the bank or in retirement. Primary purchase or a second home. I know over here in coastal Carolina, second homes are a hot topic, and then at least 20% down. And then if anyone's worried about their scenario, if they think they have a unique scenario, but they might qualify, I would just encourage them to give me a call. It's amazing how creative we can get. We do have a lot of non-QM programs that are asset. So those aren't Fannie Mae regulated, but they're private niche programs that can go up to 90% loan to value, for example, that there's different parameters in those. So I'll say if you're worried or concerned or curious, give me a call or reach out, and we can get creative and help you find that pre-qualification.
Yeah, Steven's a great guy, very responsive. I found working with him to be quite pleasurable, and he's extremely knowledgeable. So you don't have to wait till you find a house or something that you want to buy before you call Steven. You give him a shout, talk to him, tell him this is what I'm thinking. This is, he'll walk you through your financial picture and what may work for you. Maybe it's asset utilization, maybe it's a different program, but Steven is a great resource. Again, you don't have to wait till you find a house before you reach out to him. So Steven, thank you for joining us today. Here, Creekmore Realty Group, we are here to help people to learn more about the area and what communities may be a good fit for them. Also to connect them with the best resource for whatever it may be, in this case for lending. Alpha Mortgage is a great bank. I have watched them for years and been very impressed with how that bank operates. So Steven, thanks for joining us again. Steven's contact information is here. Creekmore Realty Group is on the YouTube channel, and I look forward to seeing you. Give us a call anytime.
Thanks, Chris. I appreciate it. Thanks, everyone.
You bet. Thank you.
All right. Bye-bye.